It's Sunday afternoon, December 13th, and I'm trying to set up my trading week, so I'm going through and looking for trades. Hello, traders. Let's see if we can find some trades together. First of all, I'd like to thank you all for subscribing to my YouTube channel. Last week, I eclipsed the 10,000 subscriber mark, so thank you very much. I'm trying to post great trades 5 or 6 times a week. I really appreciate all the comments that you give me. I put a lot of time and effort into this, and I'm glad to hear that all of my analysis and that my systematic approach are really helping you make money. It's what this is all about. So, as I go through and take a look at the market, that's the starting point for everything. Market first, market first, market first. I can see that the S&P 500 has a little bit of a problem in here. You can see the Bollinger Band that I've got on this chart. I popped up a separate chart so that I don't clutter my other one. Every time that the top of the Bollinger Band has been hit, the market has retraced. Well, we knew this back in here, and that's why we were not aggressively selling bullish put spreads. We did get a few bullish put spreads off this week. We'll take a look at those. They're in great shape. That's a testament to the systematic approach that we use. Market is coming in. These stocks are holding their own or moving higher. That's how it's supposed to work. That provides us with additional cushion and it increases our probability of success. So, as far as the market is concerned, we have the Bollinger Band is an issue for me. I'm also going to put up VXX. That measures option implied volatilities. When it's super, super low like this, you know that there's complacency and there's a chance for the market to pull back and for those option implied volatilities to go up. This is also a fear gauge. Right now, fear is extremely low. Well, when it's extremely low, that's when you have the biggest chance for pullback. So, again, something to be aware of, something that should cause us to be a little bit more cautious than normal. I'm going to take down this pop-up, and then we'll take a look at the SPY and continue our analysis. We also have an upward sloping trend line that's intact, and I'm going to draw that for you. Last week, we tested that. I'm going to click here, and I'm going to click here, and actually, we've passed through that point on Friday. You can see how we touched it, and we actually closed above it. But if I draw it in using this tool, I'll be able to have it pass through. And that's the line, that's the support line right there. And that was critical. But the market poked through it, but it was able to rally above it. The 20-day moving average also came into play, and that also held. And you can see the 20-day moving average, this very thin line right here, was also tested. Does this mean that the selling is over? No, I don't think so. I think we're going to see a little bit more selling pressure in here this week, and then probably by the end of the week, things start to firm up. We've got seasonal strength working in our favor. I don't see anything too dramatic happening. I should also mention that I'm recording this before the S&P futures come out. Now, this was the drop dead date for a Brexit deal. Boris Johnson mentioned that last week. He said, if we don't reach an agreement by Sunday, I am absolutely done talking. This could be very disruptive for the currency markets and for the economy in Europe. So we'll see if this sparks some selling overnight. It might. I don't know yet. So we need to be very cautious when we're looking at trades. We need to distance ourselves from the action. We need to take advantage of time premium decay. That's why we're selling premium inside of a 3-week window, meaning that our spreads will expire in less than 3 weeks, ideally in less than 2 weeks. That allows us to evaluate market conditions on an ongoing basis. The trades that I put out there are good for Thursday and Friday typically. If we don't get filled by the close Friday, we cancel them. Done. Out. We'll move on and we'll keep looking. Now, right now, we have a lot of open positions. And I'm going to put those up on the screen so you can see them. And you can see, if you watched my video from last week, I posted it to YouTube on Saturday. These were the trades that we were trying to get in. We were trying to sell the TME December $18 put. We got that filled. We were filled on our ZS December 24th, 160, 157.50 bullish put spread. we also sold the RKT 1850 put for 10 cents. The only trade that we weren't able to get done was the Target trade. So we'll take a look at those very quickly, and I'll show you with the market pulling back, these stocks actually did well. TME, we're short that $18 put right here. I hope we get a sign. You can see the strength in the stock in the breakout on a longer term basis on heavy volume. Orange line above zero. That means that the stock is strong relative to the market. I like this one. If we get a chance to buy it at 18, I want to do so. That's why we sold those $18 puts naked. If we do buy the stock at $18, our net cost on that will actually be much lower because we sold those for 30 cents. So our net cost is $17.70, and we turn right around and sell those $18 calls against the stock position. Stock runs higher, stock gets called away. We were able to keep the put premium and the call premium. That's how it works. ZS was another one that we got done. I was looking for a little pullback. We got it on Thursday, got filled at a great price. That halfway point of the long green candle was preserved. Love it. We still have that protecting us. We also have that horizontal support protecting us. 3 support levels. I like it. This trade expires December 24th. And then finally, RKT has been kind of a bottom fishing trade for us right in here. I like the support. I like the fact that it's moving higher, that it's through some of the major moving averages. I also like that it was able to get through this downward sloping trend line and hold that little pop right there. I like RKT. If you look at all of these positions, if it's a spread, we are going to make a 25% return on it. So this is not chump change. And you can see we've got 1, 2, 3, 4, 5, 6, 7 trades that are due to expire this Friday. If that happens, we're going to be very, very happy heading into the Christmas season. These are all excellent plays. They're all in great shape with the exception of BA, and that is hovering right around our short strike price. And we're going to try and reel that one in for a break even. So here's a search that I ran that is going to help me find opportunities for next week. I want to make sure that I've got good option liquidity, so I set the rating for 0 to 15. I also want to make sure that I had heavy volume on Friday. I also want to make sure that the stock is strong relative to the SPY, so I marked bullish on both a daily and a 4-hour basis. And I also marked bullish on the momentum booster on a D1 basis. This helped me get my picks down to a manageable number so that I can flip through them. I'm willing to take a look at many, many stocks, but for purposes of this video, I've got to keep it as short as I can. So we're just going to flip through and I'm going to take a look at them. I'm going to tell you what I like, what I don't like. So first on the list is ACI, very choppy. Please disregard the last candle. If you see a dupe like that, everything is updating right now. Yes, you get some decent support here at the 100-day moving average. Pretty choppy stock. We're close to it. I'm not interested in that. CCJ, they're a miner. Uranium mines in Canada. Beautiful breakout here. Great strength on Friday. Definitely something I would want to day trade. Big volume in here. And you see that it is strong relative to the market. All of these basic material stocks have a tendency to rally in December, but they very quickly give back those gains. So I'd be very careful with CCJ. In fact, I'm not going to highlight it as a pick on my list. CNK, nothing going on there. Put in a good day Friday. EDIT, I like this one because I love that long-term compression right in here and this massive breakout on big volume. This stock wants to go. Now, it's a biotech company and it's going to carry risk for that reason. And you can click on Stock ER to find out what they do, but it's all genome editing. And I know that these companies are getting a lot of patents on this, and so that may lock out future competition. But in any case, I love the fact that this stock has been able to add to these gains. It's got a full head of steam. I wouldn't buy it up here. I may day trade it if I look at it on Monday, but it's going to have to really conform well for me to want to stick my head in this news. But if I look down at this $50 strike price right here, would I like to buy the stock all the way back down here if I get a chance? Sure. If I get a chance to, well, what strategy allows me to do that? Well, that's where we get into naked put writing, especially if the premiums are right. And I don't care too much about the fundamentals of the company. I just care about the technical pattern. So if I go down to that $50 strike price, you can see it right here. Those options are 55 cents bid, offered at $2.45. Now these would expire in 2 weeks. This is a December 24th $50 put, allowing me to buy the stock here, and I would need to get at least $1 for that. Why? Well, if I get $1 for this, I've got to put up 20% of the strike price in margin. So 20% of the strike price would be $10. If I can get $1 for this, that's going to represent a 10% return for me in the course of 2 weeks. Not too bad. If I want to get more aggressive with the trade and I really need to get a bigger return on that, I mean, 10% in 2 weeks, that's a pretty dang good return on investment. If I want to get more aggressive with it, I can set a higher price target on this as well. If I want to go for 15%, then I'd need to try and get $1.50 for these. Now, this is something that I would put out there good for the day tomorrow. If I get filled, I get filled. If not, I'm going to continue to move on. And we can also take a look if you wanted to go with the December 18th. We'll look at those $50 puts. Those expire even earlier. And that might actually be a better play because it's only a 1-week trade. And you can see those are 55 cents bid, offered at 85 cents. So I'm going to change that trade to a December 18th. We'll keep it as short as we can. If the stock pulls back with the market tomorrow, that would be ideal. We get a market pullback and we get a pullback in the stock. It finds early support. It's starting to show some relative strength. Those would all be factors that I'm looking at. And every day that ticks by, every minute that ticks by, that time premium decay continues to work in our favor. So that would be one that I'll take a look at. EDIT, selling the December 18th, $50 puts for $1. That trade would run its course in 1 week, and there's a chance for us to make 10% on it. So I like it. Let's take a look at the next one, EGHT. This is another flyer. You can see how the stock is way up in the last 2 days. It's run up basically from that gap at about 23.50 all the way up to 31.50. You can't touch it up here. You can't even sell any naked puts on this one. It's just too far out of the gate. You need a little bit of a pullback. Now, I would expect half of this green candle to open or to hold. I'd expect at least half of this green candle to hold. So that would be one support level. I'd expect half of this green candle to hold. That would be another support level. That brings us down to, let's say, the $26 level. That's about as close to this as I would care to get. It's a real flyer on big volume. So let's bring up trade. We only have December 18th available to us, and we might be pretty limited in terms of the strike prices. There you can see I was willing to go down to the $26 strike. We got to go to the 25s here. Their nickel bid offered at 10 cents. We're not going to get enough money in this one to make it worth my while. What would I be looking to get for it? If I could get somewhere in the neighborhood of 30, 35 cents for it, that would be of interest to me. I don't see that happening. So we're going to keep looking, see if there's anything else that looks good to us. Next one is IMAX. Choppy, consolidating, compressing. You can see here, there's not a lot going on. Maybe you could sell a bullish put spread below this level. Doesn't interest me. Barely has any kind of relative strength. INSG. Downward sloping trend line, breach to the upside, major moving averages. It blew through those. Decent volume on Friday. Big spike up, but the stock cannot finish above the halfway point of this long green candle. So, maybe not my favorite. Definitely something I would consider day trading. Any premium in this one down at the $11 level? Let's take a look and see if we've got anything. $11 price level. They don't even have that strike. You'd have to go to the 1250s, which puts us right in the gap here. I'm not interested in it, even though there is pretty good premium, 35 cents bid offered at 40. Yeah, down at the $10 strike, we're just not going to get anything all the way down here. If the stock really came back in and checked this breakout, maybe. So I've got to take a pass on that. I don't see anything that's real compelling for me. IOVA. You can see biotechs are really performing well right now. Got a breakout right here. We have the 20-day moving average coming up into this level. That's also a decent support level at 42, stock at 49. Let's see if it's got any premium in it. And again, all we have is monthly options here, so that's not helping us very much. In my next query, I'll have to mark weekly options that will give us more opportunities to find some decent stocks. And here you can see that at the $45 strike price, you start getting a bid. At the $40 strike price, no bid offered at $1.60. These are all decent trades to stocks to day trade, but there's just not anything setting up for us as far as a decent option swing trade. But I do have a couple that will look good. So hold with me. I'm going to get through this analysis in a few more minutes. I like this breakout right here. MDB. And here you can see that cloud computing stock. I like it. I like everything here. I like that's the earnings after the close, but it didn't get a big earnings reaction right in there. It wasn't until Thursday and Friday that it started to move on big volume. But I like it right here. You can see that the breakout is at the $280 price point. Let's see if we can get any premium. Hopefully they've got some weekly options on it. They do. So we'll go a couple weeks out to the December 24th expiration cycle, and we'll look at those 280s, see where they're at. And we've got the 280, 277.50 that we can take a look at. And I need to get at least a 50-cent credit for this trade right here. It's pretty close. You can see it's a negative 70 cents bid offered at 90 cents. With a little bit of a market pullback, I think this could be a really decent one. Okay, this would be symbol MDB, Mary David Bravo, selling the December 24th 280 puts, buying the 277.50 puts, doing that spread for a 50-cent credit. Yeah, I like that one. I think that's pretty good. Continue to take a look. RRC, nothing there that interests me. SDGR. This one, yes, I do see a nice pattern in here. Downward sloping trend line broken to the upside. Got a low that's established here. Stock rallies, comes back, tests that low. Higher low double bottom. That's good. We've got horizontal resistance. 1, 2, 3. Breaks through that horizontal resistance. That's now support. 1, 2, 3, 4, 5 checks. Right at that 20-day moving average. Above all the major moving averages. Keying off of the $63 level. Yeah, I like this one. I think this is a pretty nice one. Not going to get much on the Decembers with only a week left, and you can see they're only in $5 increments. So selling the 65s right in here, right on that support, it's a little dicey for me. I would have to sell the 65.60. You can see it's 25 cents bid off the screen. I'd have to get a dollar for that. Not going to happen. I could go out to January, but then I'd have to drop down to the $60 strike price for my own parameters to work. And we'll click on the 60.55. And there you can see that that spread is 55 cents bid offered at $1.25. If I could get a dollar for that, I think that that would be acceptable to me. That is a longer term trade. As I mentioned to you, I'm liking to keep everything inside of a 3-week window, ideally 2-week window, so that I can evaluate market conditions. You'd have to do a little bit of fundamental analysis on this one because this one is a month and about a week. So yes, it could make sense for a longer term swing trader. It's not something I'm going to be looking to do, but it might fit your style of trading. Snap, SNAP, really nice upward sloping trend line here. We have horizontal resistance that formed right here. We had a breakout to the upside. So now that support, 1, 2, 3, 4 tests, goes through the high. Really nice relative strength. Yeah, SNAP looks really good. So we're going to bring that one up, take a look at it. Now, for us to get in around the $45 level right in there, that's where we'd be looking to sell that bullish put spread. We're probably going to have to go out to December 31st. That would make it the last trade of the year for many of you. And we'll take a look at the 45 puts, and we can go down to the 44s. Now for a spread like this, I've got $1 between the strike prices. I need to get 20 cents for this. The midpoint is 9. It's not there right now, and that's okay. Because if we get the pullback that I suspect we might have in the market, this stock pulls back and it checks that breakout. That would be enough to get this spread in line for us at 20 cents. And we have this upward sloping trend line protecting us. We've got this major moving average protecting us. We've got fantastic relative strength in the underlying stock protecting us. So yes, I think this is a decent spread. This is an order I think you can have working for 2 days and then cancel it if you're not filled by the close on Tuesday. We are selling the SNAP Snapchat, the December 31st $45 put, buying the $44 put, doing that for a 20-cent credit. What's super important is that you are not forcing trades. Let's say that the market pulls back tomorrow and we don't get filled. You can cancel the order. If you feel that the market really is starting to accelerate its downward momentum, err on the side of caution. Let's say that Tuesday we get some follow through selling and the spread is there again for the taking and the market finds support during the course of the day and it closes near its high of the day. Okay, in that scenario, you might think this market decline has started to run its course. We found support. I'm really happy with the way that the stock held up. That's how I would approach these trades. But I think Snapchat looks good. This is a decent spread. Expiration December 31st. It fits all of the other criteria. Now, the other stocks that are on the list here, Hostess I looked at, there's nothing really going on there. These are all ETFs, volatility. Letter Z, Zillow, actually very nice chart here. I've been highlighting this in my daily videos. I love this breakout here. Tries to get through and backs off, tries to get through and backs off. Now it's broken through and we've got a couple of nice long green candles. Unfortunately, the option of liquidity for Zillow is fairly poor. We'd have to come all the way down to this 105 strike price for me to feel comfortable. You can see we've got a couple of major moving averages that also run into play there. That support right there. So we could take a look at it, but I think we're going to see mile-wide bid-ask spreads on this, and we've got to get all the way down to the 105 strike price. So that's a fairly tall order in the course of the next couple of weeks. And we'll go to the December 31st expiration, and we'll take a look at the, well, we'll go 105, 104. And there we can see that that is a negative 20 cents bid offered at 56 cents. And the midpoint is 38. We need to get 20 cents. That actually works pretty well too. I would be happy with that spread. That's another December 31st expiration. Selling the 105 puts, buying the 104 puts, doing that for a 20-cent credit. We get a little bit of a market pullback tomorrow. I think that you'll be able to get that trade done and you'll be all the way down here for support. Now, if the market breaks major support, don't do the trade. You'll want to watch this upward sloping trend line that I drew for you earlier. That's a key support level. We don't want to see that fail easily. Test it again? Sure, no problem. Long red candle closing on its low through this upward sloping trend line? No bueno. We don't want that. Market pulling all the way back down to this 260 level right in here. That's the next support level. That's where I probably would start looking to get more aggressive if I start seeing a bottoming process here for the SPY. Couple long red candles in a row, I'm not interested. You've got to be very careful in here. I'd mentioned the Bollinger Bands. The VIX is very low right now. Yes, we have seasonal strength working for us, but this is a low probability trading environment until that support has been established. Once it's established, then we can get more aggressive. It hasn't happened yet, so it might happen over the course of the next 2 or 3 days. If you follow my pre-open market comments each day, which you can do on Twitter, I posted that link in the description area of this video below. Click on that. You can read my pre-open market comments each day. You'll know when I feel that support has been established, and then you can get more aggressive with your longs. If you like this content, please give it a thumbs up and make sure to subscribe to my YouTube channel. I really appreciate all of your support. Make sure you turn on your notifications so that you never miss these videos. Good luck trading. Let's see what the market has in store for us tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.